Very good afternoon to you traders. It's Mark here from the Daytrading Room. It's a Sunday afternoon, coming up to 20 past 1 London time. Just sitting here reviewing my trades for the week and planning the up and coming webinar on Wednesday the 27th of July. That's going to be risk management for day traders webinar. As I say, Wednesday 27th of July. That's 5 p.m. London time, and that's 12 midday Eastern New York time. So hope you can make it. The link is at the bottom of the blog post, or it's also on the YouTube underneath the YouTube video. Go to webinar, so register for that. Make sure you've got your place. I will be recording it if I remember to press the record button. I have a habit of not doing that, but hopefully it will be recorded and available for you if you can't make it. But it'd be good if you could be there, because we're going to have an interactive Q&A at the end of it, and I think it's for me one of the most important aspects of trading. Good setups come and go. You have spells where setups just work beautifully for months on end, then you're constantly looking out for new setups, tweaking them, and that's part of trading, of course. But the core and fundamental pillars, if you like, of success for trading is definitely risk management. Without a shadow of a doubt, risk management. It's a bit of a dull topic. I think people don't find it sexy enough. They like to see setups. But those traders who know the score, and especially professional traders who are doing this for a living, know that risk management is the number one thing. So I'm going to talk about the importance of risk management. I'm going to talk about efficient stop placements, where to put your stops, how to use stops in a little bit of a different way to stop yourself being stopped out on noise. How to judge where to put that stop, but yet still protect yourself from any of those silly events that happen, and also obviously from a trade that doesn't work out. Position sizing techniques, how to adjust your position size to suit A, your trading pot, B, your risk tolerance, and C, the actual setup you're taking. I'll run through how I select my position size. Money management, part of your trade plan. In other words, what's your trade plan say about daily risk, trade risk, and all that sort of stuff. We'll run through again. I'll use an example on my trading, and we'll use hypothetical examples as well, so maybe you could utilize some of that information for your own trading plan. Scaling strategies, why I believe that scaling is so important. Now, as a personal thing, obviously there's some traders out there who don't scale. I'm talking about scaling out of position here, by the way. Why I think that's important, and I'm going to talk through some of the techniques I use to scale, why I choose to scale, what levels I choose to scale, and how I frame the trade in that way. And then a final short piece will be on backup planning. So worst case scenario, what happens when exchange goes down, what happens when internet goes down. These sort of things, little things, just so that you make sure at the end of the day you're running a trading business, and you wouldn't run a business without some sort of backup planning. So just we'll spend a few minutes on that, just running through, make sure I thought of all the scenarios. So Wednesday 27th of July, as I say, 5 o'clock London time, that's midday New York Eastern time. Risk management for day traders. Hope to see you there. Okay, so I just want to run through some trades from Thursday and Friday. Actually, I'll probably just do Thursday. We'll see if we've got enough time to do Friday. I don't want to make this video too long. But I just want to run through really in some detail the Thursday opening trade, if you like, first trade of the day, how it's set up, the premise behind the trade, the planning of the trade, and how it actually worked out. So we had a pretty reasonable gap up on the Thursday. This is pretty solid gap up. But the key thing for me was the fact that we were gapping up above this magic 12,600 Dow cash level, which has been so important the past week. So one of the things I'd said before the open, this was after we had the morning meeting, and then just went to the chat room, and about 9:15 I'll just bring in here, this is an extract from the chat. I don't know if you can see that, should be able to see that.
Yeah, just summarise the meeting, which was staying with a long bias unless the open says otherwise. So in other words, unless we're getting a really hard drive lower, and I mean hard drive lower, I'm just looking for longs. So that's the hypothesis of the day so far, and then we'll build on that. We'll build on that. And the next point we build on that is to say, okay, but a drive lower at the open to our, I should say, correcting myself there, typing quickly, not the most accurate type, I have to say, but a drive lower at open to the 12,600 cash level may present a buying opportunity. In other words, shaking out some weak longs and then driving higher. Okay, let's take that out of the way. So that was the premise of the day. The premise of the day was we're staying on the long side and looking for a push down to our 12,600 cash level, and at that point read the tape looking for a potential buying opportunity. I'm not just going to buy there, but that to me is putting in 3 out of 5 or 4 out of 5 of the criteria for the trade. So we're on the long side, it's pulled down to our level, now we just want to look at the tape. So we opened up, pushed down, and let's bring the tape, the chat extract back in again. Just after 9:30, so just after the open, about a minute after the open, tape seller at 62. So we spotted that seller there, identified him. In other words, don't get long yet. We're not looking to get long. We're not looking to get long yet. We could still hit our 12,600. So tape seller was around this level here. No reason to get long, and I'm not going to take a short either when my bias is on the long side. I'm waiting for that buy opportunity rather than the short. So even though there was a tape seller sitting there which indicated that we could possibly go lower, I'm not going to be taking the short. I'd rather it go lower, find some support, and then we push off. So yeah, the ticks were still high, 12,600. We're nearly there, and one of the room members went long at 12,544. So I think got a better entry than me actually on that one. But that was perfect. It was perfect in terms of what we planned before the day. So we'd said, okay, we think it's going to be a strong day. We also think that it's going to pull back, shake out some weak longs. Perfect place for it to pull back to would be the 12,600 cash level. Worked out very nicely with a nice little pullback in ticks. Take buy there, bang, and there's a trade. Scaling out, it was a nice aggressive move actually. These are 20-point increments, don't forget. So really good trade. Just looking at what the room members did, he took some out of 58, so 14, and then I mentioned there, hey, look, you could really target the overnight high now if you're feeling brave, because there was so much strength there. You scaled a little bit more, and then I said, there we are, here we are, guys, overnight high, and he was all out. I thought we had one more shove, and that was at 9:46, so that's at 14:46. That was here. I think we had one more shove there. But that was the overnight high tagged, but we did have a pretty severe shove actually. That was much more of a shove than I had expected. I thought we wouldn't, but we got the 1,000 tick reading anyway, which was what really we were looking for. The ticks were so strong, the drive was so strong, it's likely to end in a high tick reading of over 1,000. So yeah, the premise was great. The setup was great. We stayed clear of this because of the tape seller. Got long here, scaled out as I like to. Then the overnight high was tagged. Boom. Expecting one more drive, but not on that personally. Maybe others were, but I wasn't. For me, that was a great little trade. You know, that's a lot of points for an opening trade. And we did get that last little push. There was 1,000 ticks, and actually it was quite a nice little bit of extra juice in the trade. So that was a good opening trade. Seriously nice drive with all the right attributes for a good long. So yeah, great start. I want to talk about this trade as well. This was a trade I took. Tick pulling back to zero trade. Yeah, no, if you've looked at the videos, you know it's one of my favourite trades. Looked fantastic. There was the high. Oops, there was the high. If you can just see that. We'd unwound. We started a good drive up here. Some news coming over the wire about something or other. So, and the volume obviously peaking very slightly. Ticks driving higher. There's the pullback to zero. So there's my long. And this time I think this is great. This has got plenty of mileage in it. It's a strong day. Great. We've got, you know, targets in sight on the upside. Fantastic. Hold this, and you know, we'll make a great trade out of it. And this just shows you why risk management is so important. So I'm sticking with this, and I didn't take a first scale. My first scale was going to be at that high. That was the plan as we approach the high, in case we got the double top. So sitting with it, great little entry, great tape read, a few ticks off that low swing, absolutely perfect. Couldn't have asked for more. We pushed up, and then some news came out, and boom, straight down, stopped out, position gone. And that's how important it is for risk management, to manage your risk, because anything like that can happen. The greatest trader looking in the world, that's fantastic, and 9 times out of 10 that's going to give you your extra drive. You're going to at least get your first scale off, even if it rolls over, and it's not going to be a losing trade. It's going to be a nice little winning trade. Didn't get my first scale off, and news came out, and boom, take the stop, and out of there. That's trading, guys. That's what happens. Now, just think for a moment, if I hadn't taken that stop, okay, and this news had been serious, and we drove another candle, another candle, another candle. If you're not out on that beginning of that move, you've got a danger of being stuck and caught like a deer in headlights. You know, it's definitely it's a trait that a lot of people do. They get caught in a position, they're down now. We're buying at 80, you down say 80 points, hurting like crazy, don't know what to do with the position. You know, just ditch it. If something like that comes out and the premise of the trade is negated, just ditch it. Okay, it did go up, and okay, it did push higher, and okay, you know, the trade would have been a profit, but to me it's irrelevant. The premise of the trade had gone, some news came out, bang, stopped, out, forget it, look again for some other options. At the end of the day, if this had been something really serious news and we had a severe sell-off, now the stop that I took there, if we'd had this sort of action, I've no doubt we'd have had a small little pause before driving again, so I would have got it back and more. If it had been a genuine news item, I'd have not only saved myself, but I've actually made money on the trade. So that's what stops are there for, and that's what I'm going to talk about in the webinar on Wednesday, stop placement and all the other things I talked about earlier. So you know, great stuff, plenty of opportunities going on. I'm not going to go through Friday's trades. Friday was a good day, actually. That was quite a patient day for me. I ended up buying round after we pushed up here. Finally got the low tick reading. Waiting for that all day. We were in the office. The pair of us were looking for that all day, all morning, should I say. We got that 1,000 tick reading. Bang! Lovely entry. Scaled out. This was the VWAP. Actually, I haven't got it on here, but this was the VWAP. So that was an obvious place to take the majority off. And then I left a small token position on, just thinking that this was the sort of day we could end up coming back and filling the gap. But as we started to push up and started to wane a little bit, and the trend was quite shallow, I ended up taking it off, but I held it for quite a while. For me, a long hold. So that was a great day as well on Friday. So can't complain. Looking forward to more of the same next week. Really important to know your levels. Really important before the open to have some sort of plan, even if it doesn't go to plan, if the market does something different to you expect. If you've got some levels in mind, and don't be set in stone with it. Notice that when I said it could be a buying opportunity, it's not mean I've got a limit there. I'm not waiting for that. Regardless, I'm going to look then at my tape. So as it approaches the 12,600 cash, looking at my tape, looking at my tick, looking at the price action, looking at everything that I want to look at to confirm the trade. When I see the selling stall, I see the buying step up, I see bidders coming up, I see a little bit of action moving from a quick tape down to slow tape and then reversing. I'm taking the position. My risk is quantified. I know what my targets are. The overnight high is my target. It seemed ambitious at the time, but perfectly feasible the way the market's been. So, plan the trade, think about the trade. Or plan where you're going to get involved in the trade and how you're going to potentially position yourself should the market get to the level that you're interested in. So good trading, guys. Please manage risk. If you haven't seen the video on YouTube, my earlier video, I There's a guy who out there. I'm not going to go on about who it is and more about it, but he didn't manage risk and he's paid the ultimate price for it. So please manage risk, and that trade there is a perfect example of why you should manage risk. And you know what? A stop, I've forgotten about it. It's not even a concern of me. Just reviewing it today for the blog. It doesn't bother me. If that slammed through lows and I hadn't taken an early stop, you bet it would have bothered me. And that's why risk management is so important. So please manage risk, guys. I should be back with another video. Perhaps not before the webinar. So hopefully see you at the webinar on Wednesday. I'll probably end up with a video probably later in the week on that one. So take care, guys. Enjoy the rest of your weekend.